From our studios in Los Angeles and Tampa, this is Green Tag, the theme park in 30. I'm Philip. I'm joined, as always, by my co-host Scott Swenson of Scott Swenson Creative Development. On Green Tag, we break down the week's top news from the theme park world and explain why it matters to professionals. This week, though, we're going to be talking about trends. We're looking at the last 18 months of what we have talked about on this show and trying to break up the top 5-ish trends that are critical for the industry. Here we are, Scott. We're recording this early.
I was just going to say, do we want to explain why we are doing a show about trends and not about the immediate news of the week?
Yes, we're recording this early because I am at the Midwest Hunters Convention on a gig there. And so if we're going to talk about trends, but if there's some crazy news that has come out and you're wondering why we're not talking about it, that is why. And also, if you're like, why is Philip and Scott look exactly like last week's episode? And well,
I just changed my lighting. I changed lighting.
We didn't even change clothes. And
I have several shirts that look like this, but I'll be honest, this is the same one.
Yes, we're recording this early. It's okay. It's the same thing. So basically, what I did was I looked at the last 18 months and I was trying to put them into big buckets. Like, what are the big things? What were we talking about last year, at the beginning of last year? And then what are we talking about now and how has it changed and whatnot? And you know what? The biggest one we've talked about several weeks now, but it still continues to be a thing, which is the acquisitions and merger. Because last year in 2024 was when the Six Flags one was first announced, right? And then it closed early 2025. So we've been talking about that. There's also the Herschend Family Entertainment acquisition, which we just talked about last episode of last week about that. So that those are two big, one's a merger and one's acquisition. But there's also the Falcons Beyond Global that has acquired Oceaneering. We talked about that a few episodes ago. And then I also put this kind of sort of related, but it's like RWS Global is expanding, but they're also now entered into that exclusive partnership with Merlin to provide the entertainment for 6 flagship resorts, which is consolidation in a way as well, where they're consolidating in order to serve a large entertainment. So that's a big trend. And it seems also what we talked about with the pendulum concept we always talk about, which is that these things go back and forth, where it was a bunch of breakups and now it's going back to basically vying to be one of the top 3 or 4. Like you're vying for the 3rd or 4th position is what everybody is doing, it seems.
Well, or even the first and second in some cases, but when it comes to consolidation, yes, it's absolutely the 3rd and 4th, and you know, it's interesting because I will make a prediction. I'm going to put on my hold on, wait. I have a crystal ball here. Wait, looking into the crystal ball. My crystal ball is solid black, by the way, because I'm wicked and evil. I'm wicked and evil. But I'm going to look into my obsidian ball, and I'm going to say that we have not seen the last consolidation announcement. I think this is a trend that's going to continue for a little while. And you're going to say, oh my gosh, Scott, who could possibly consolidate more and who could buy whom and what merger could happen? But I think this is one of those situations where we're far enough out of the pandemic that people are starting to go, well, you know what? Here we kind of had to go back during the pandemic and reevaluate everything we're doing in our company. And we could do that more efficiently if we had an economy of scale. And I think that's what has, on a very simplistic way, you know me, I always like to dumb them down so I can understand them. So I think on the simplest possible terms, that is what has inspired some of these mergers and acquisitions. You know, there are people who will argue that no, it's just all about money, and I'm not going to deny that it is about money. This is a business. This is not a hobby. So yeah, it's about money, and there's nothing wrong with that. What I am also going to say is the reason it's all happening now is because there's been enough time to kind of reevaluate. And just like we've all done personally to reevaluate how much we work from home, how much we work from an office, how much, you know, what is our work-life balance, blah, 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 blah. How can we make our lives simpler, blah, 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 blah. All this post-pandemic stuff angst that we've been going through. And I think companies have been doing the same thing. And I think that's why we're seeing things like all of these mergers and acquisitions. It's like, how can we do what we do, but do it more efficiently?
Yep.
That's just kind of my 30,000 foot view on why. this trend is happening. And like I said, I would venture to say and I have no insider information. This is not insider trading. This, I don't know. But I would venture to say that it ain't over yet. And it's probably going to happen on a smaller scale because we've already seen, the Six Flags Cedar Fair one was the one that I did not expect, but I'm kind of glad. And we're going to talk a little bit in Unhinged about dig a little bit deeper into whether this is a good move or not. But and the only reason I will tell you, the only reason we're moving it to Unhinged, this is not a bait and switch to get you to join our Patreon. The only reason we're going to do it there is because we can be a little bit more. We can take the gloves off a little bit more, and we can shoot from the hip a little bit more. So it's not to say, yeah, we're going to talk about this here, and then when we get into the good stuff, you got to pay for it. I'm not saying that at all. What I'm saying is, because there is another level, and people will understand that we can be a bit more frank. That's the only reason. That's the only reason.
Well, we've talked so much about this past several weeks. I didn't want to spend too long on this one because it's like we've been doing nothing but talking about, because it's the most immediate thing, But
it's been like boom, boom, boom. They're kind of It's been like Six Flags and Hershend and Falcons. It's just been like
recently. It's all been very recent. So the next one, I'm going to kind of label this like loosely as increasing per cap / like premium offerings. We've been talking about this the past 18 months, and it just seems like we're getting more and more of these examples. And we talked about the concept of budget, family-friendly pricing, that kind of stuff that's come, value pricing basically, that has come much more recently. But even with this value positioning that a lot of places are taking, they're still not neglecting to flesh out their premium offerings. And Scott calls it the velvet rope concept. I mean, this has been going on for a long time, but I think more recently it's become a lot more developed. And, some of the recent examples we talked about, which I even forgot about, but remember the Disneyland Resort $400 premium pass? That's a thing. That's still a thing. And it's a thing at both parks. I mean, the $400 fast pass, just that, remember, all it is it's just where you can use the fast pass. You get one fast pass per ride, and you can use it at any time for any of the rides. And it's a $400 on top of your ticket price, and then plus the Genie Plus and the Lightning Lane and the Priority Lane program they're rolling out all over. And, Merlin talked about this when we were at IAPA, and then kind of talked about the idea of missing the pricing curve, and they should adopt dynamic pricing and also have the more premium robust offerings. Six Flags mentioned it recently in their Investor Day thing, where they deliberately have to renovate their F&B because they need to be able to have more premium offerings for that. I mean, concerts, other venue. I mean, it's everywhere. It's everywhere. Basically, the idea is that, especially in America, because we have this bifurcating, we have the top, the top 5% controlling a significant amount of wealth, almost equaling what the bottom 95 does. Then you have this bifurcation. So you kind of need to be able to have the premium experience, but also still have, the budget items. So,
well, and let's not forget, Six Flags, now that they are expanding. I just went to the Six Flags Great America website, and one of the add-ons is the 2025 National Ultimate All-Season The Flash Pass add-on. So you can basically, the Flash Pass is an admission pass with all park passport to enjoy immediate access to the priority boarding lane on the most popular rides every time you visit a participating Six Flags park across the country. So This is, in essence, this is a fast pass for all Six Flags parks.
Yeah,
it is a fast pass for all Six Flags parks. You want to guess what the monthly fee is for this add-on to your season pass? Now, you have to have a season pass to one of the parks to add.
So you're adding this on.
You're adding this on to a season pass.
$125 a month extra?
162 a month. And that gets you Lightning Lane Pass at all parks. And it says, there's a couple asterisks here. It says, for 5 months with an initial payment due today, plus applicable taxes and fees. So, and then it says click product for full details. They're also doing add-on. You can also do add-on all-day dine passes. You can do add-on picture passes. And this is Six Flags. This isn't Disney, kids.
Yeah.
This is Six Flags. So you can get your seasonal drink bottle. You can do that when you purchase your pass. So for $35, you can get an all-season souvenir bottle, enjoy Coca-Cola fountain beverages, and get free refills during the 2025 season when you visit the park. Only a 15-minute interval between refills.
I think the reason this is such an interesting trend is because when you look at, I think, a macro sense, we started off where, I don't want to go back in the day, you had Disneyland, where you didn't have fast passes. It was the concept of all the guests were kind of treated equal in a way. Mm-hmm. And now basically what we're doing is creating a class system within the attractions that we go into, where there's always another level that you can buy into. You got, I think Disney is definitely the worst, but you have even like I have the top pass at Disneyland, right? And then but beyond that, you can do the plaid packages, right? And then beyond plaid, you can do the Club 33, which is I think $30,000 a year or something. I mean, so like you can keep plussing until you get concierge like white glove, and it's just this has been spreading to more and more and more attractions, and not just the theme parks, but also the individual smaller attractions. And even in Asia, where it's it's I think it starts here in America, then it jumps over. And I saw it even, I think I was last Halloween. Remember when I talked about the package? I think at one of the parks that was like $2,000 for like a Halloween experience. I'm like, it's crazy, but I considered it for a hot minute, and then I slapped myself.
We've talked about it. I mean, we experimented with it even, what was it, 15 years ago at Busch Gardens. We were like, what we had a concept. It didn't fly. We never did it, but we had a concept. You'd be picked up in a hearse at your home. You would, you'd lounge in the back of the hearse until you got to the park. You'd have a separate entrance. You wouldn't go through even the parking lot. You'd go into a back area entrance. It was, we went through.
Well, and that's the thing in the Middle East. You've worked at a lot of places where they do have those VVIP.
Oh yeah.
They have to.
Well, I mean, in the Middle East, in the Middle East does VIP really well because they have a royal family. So, when you fly out of Abu Dhabi, for example, there's a separate airport for the royal family. It's it's mind-boggling. But again, these kinds of velvet rope experiences, everybody looked at Vegas and went, "Hey, if Vegas can do it, why can't we?"
Yep. Well,
and the reason Vegas did it is so that they could comp their high rollers. But then they discovered people actually pay for this.
They would pay for it. Yeah. I think it also reflects not just the whole concept of a class system, but it also reflects like the idea that like you have people that can afford this now. Mm-hmm. Whereas like I think in the past you had just a more robust middle class, you had a more equal kind of income systems, right? Where people their lives were closer, right? But now you have like so many people in America that lose their healthcare, can't afford XYZ. You have down here, so they're really like the budgets are really, 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 really thin. And then you have the largest growing demographic in America is millionaires, and so then you have billionaires. So you have this weird thing where you have very, very, very budget conscious people. Again, back to the Six Flags Investor Day, $8 per hour type of value proposition they're proposing. But then you also have the millionaire class and above, millionaires and above. So you're wondering like, what do you provide if you're going to try and tap into that? What do you provide to them to encourage them to come to the park? And you're like, well, if you have a separate entrance and you don't have to interact with the peasants and you can do whatever you want, I mean, that's it. But again, it's that idea of the class, effectively a class system in the parks, but also indicative of a larger economic trends.
And I also think that in addition to the economic trends, because I agree with you 100%, Philip, in addition to that, I think what has value to people has also shifted. I think that instead of we're going to sell you, we made 5 of these diamond encrusted Disney castles. Instead of doing that, they want to sell you higher experiences. I think more and more people are. Disney's a strange anomaly because they sell popcorn buckets that go quadruple in price by the time you get home and put them up on eBay.
Yeah,
but I think the experience of it is really what they want to buy. And I think, quite honestly, the popcorn bucket phenomenon that's going on with Disney, I think it's the experience of getting there, getting in line, waiting for it, having that sense of, oh, am I going to get it? Am I going to get it? Oh, I got one. Yay, I got one. I got two. Great. I can sell one and pay for this one and my park ticket. There is an interactive quality to that. There is an experiential quality to that. And I think that is what has really kind of put a shot in the arm for these various levels of increasing. The one thing I do want to talk about, just because we mentioned this before we started recording one of our shows, the term per cap. So the term per cap apparently means different things to different people.
Yeah.
And I mean, basically, per cap obviously stands for per capita, and it's the amount you make per guest who comes to the park or attraction. I understand that completely. What's interesting to me is we often, as operators, were less concerned about either the overall per cap or the ticketing per cap, the gate admission per cap, than we were the in-park spend per cap. Now, it makes total sense that if you're an investor or an owner, you're far more interested in the overall per cap. How much money are we making from each click of that turnstile? Yeah. I get that. But I just want to make sure that, when we're talking about high-end per cap, what we're really talking about, or increasing per cap, we're increasing per cap by in-park spend, or by elevating the experience, add-on experiences. We're not increasing per cap by increasing the park entrance fee, which I think is a really important quality, or a real important thing to talk about, because we don't. It allows everybody to have the opportunity to experience your park, but experience it in a different way.
Well, yeah, that's a great segue into the next one here, the next big trend, which I've loosely labeled festivals to drive loyalty. That's kind of how I've kind of loosely labeled it. And I think it was on my mind directly because it was brought up so often in the Six Flags call about and that's exactly what they're talking about in the Six Flags call, was basically saying they really need to double down on attendance, but more specifically about converting attendance to season pass and encouraging the season pass people to return. And the way they would do that is through guest experience, but also Seasons of Fun, which is their festival model. And they were talking about how that would in a way decrease per cap spending, because they're, the investors and Wall Street look at that based off of just your gate, like how many clicks and then how much is ticket price, because again, it's a more basic metric of measurement than I think we would look at as industry professionals, where it's total attendance and total guest spend. But they basically, the overarching thing here is the concept of increasing the festivals, which is interesting because, again, this is another one of those weird, like, I think, massive macro pendulum back and forth. And we've talked about on the show, it's the concept of, like, are you going to put in a new roller coaster that takes time and effort, and it's a longer lead time? And again, they talked about this on Six Flags. They talked about how the expenses were growing, so that where they would have done 5, now they're only going to do 4, because that's the amount of expense, inflation that's come into that. And so, but overall, we look at it where we're like, okay, it's kind of like you balance these two things. You balance putting in a new attraction with then balancing live entertainment and festivals and shoulder fill in and that kind of a thing. And it seems like now we've swung the other way, where now we're back to putting in all these festivals and all this stuff. And the labor market has helped recently. The recent labor market, I think, has helped. But when you look at these festivals and this stuff, so the Disneyland shows, the Disneyland 70th, all this stuff is part of that. But then you look at, like FanFest nights, the Universal Hollywood Butterbeer season, Back to Hogwarts, Halloween Horror Nights, last year Jollywood Nights coming back again for the second year, Mickey's Very Merry Christmas Party, Mickey's Not So Scary Halloween Party, which we didn't talk about on this show yet, but they've already sold out several nights for this year, and that's a massive party. Oogie Boogie Bash is coming back. The Coasters After Dark thing, which we talked about last year, which we barely talked, I forgot about that. The DC Universe of Light, walkthrough, which is the Gaylord, summer version of their ice, experience. The Flavors of the World at Six Flags, Scream Break, Dark Nights at Hershey Park. It's like, it is. The festivals are just growing like massively. I think this is the overarching large strategy, right? Is that as capital becomes harder to deploy for those long-term investments, you need to shift to lower asset stuff, which is the seasonal overlays. And as staffing becomes easier, that becomes easier to do because these are overly reliant on live entertainment. And so then you get this explosion of all of these things. And what they're trying to do then is drive repeat visitation, which increases per cap based off the total park spend. That was really complicated.
That was very, but again, you explained it very well, Philip. Thank you very much.
Thank you.
I love the fact that you said it's a pendulum, because there was a time where they felt that festivals were too risky because you had to invest so much time and effort into something that does not produce a hard asset.
Isn't that crazy? And now we're like, how wild is that?
Opposite. Why would we? Well, because again, we've shifted from, and who knows, we will probably shift back, but we've shifted from the mentality of we're buying something. It's the difference between buying a car and using an Uber. You get to work the same way. It just depends on what you want to do. Do you want the pride of ownership, the convenience of knowing that your car is always going to be sitting in your parking lot or your garage? Do you also, as a trade-off, want to have all of the frustrations of making sure that you do your oil changes on time, and if something goes wrong with the car, it's up to you to fix it? Or do you just want to pick up your phone, put in a bit of information? Actually, if you're going to work, just hit work, and Uber comes, picks you up, drops you off. Done. So do you want to accomplish the goal, or do you want to own something? And it's interesting because the pendulum has so swung back. My running joke used to be, back in the Busch Gardens days, I used to say, well, we could either do a brand new roller coaster, which will amortize itself as far as a bump in attendance for anywhere from 3 to, on the outside, 5 years. We'll see. Well, it'll have a sharp decline, or we could do Howl-O-Scream for 30 years.
Yeah.
That's the trade-off. And I think finally people are starting to recognize that these pop-ups, and I think also the consumer has changed. They don't want as much. Yes, there's still a place for the Haunted Mansion in my heart. I want to go back and experience the Haunted Mansion because it is an icon at Disney. But most people want to know, if I'm going to go to a park more than once, I got to have a reason.
Yeah,
it can't just be, I really like this park. I like this park, but I'm going now because, we used to say at Busch Gardens here in Tampa, people would say, oh yeah, I love Busch Gardens. When was the last time you were there? Gosh, I don't remember. So how do you know you love Busch Gardens, and why haven't you been? Well, it's always going to be there.
Yeah,
so
exactly.
To create these festivals, these pop-ups, these seasonal events. I will tell you right now, and I don't think I'm going to get in trouble for sharing this information, one of the most requested topics for EduSessions for IAPA in Orlando, I don't know whether it's true in the other ones, but is seasonal festivals, and Halloween specifically, simply because people want to know, the people who haven't gotten on the bandwagon yet, or even the people who have, want to know either how can we do this or how can we do it better? Because again, you're basically doubling your gate if you're doing a second gate experience. You've heard me use the phrase way too many times that Halloween became the 13th month. Yep. And those of you who are operators, you recognize that these kinds of seasonal festivals not only give you significantly more revenue and profit, but also the real reason is it makes it so that you build brand loyalty. You get people to come back to your park multiple times per year. If you don't do seasonal festivals, people will come to your park once a year.
Yep.
And that's it.
Yep. And interesting, I keep going back to this because I spent so long reviewing the Six Flags investment day thing, and now they're all like stuck in my brain. But I remember they actually did talk about the differences between these two on the call. And basically they said that opening a new coaster will only give a 20% lift for roughly a year.
Mm-hmm.
And then, but then obviously to Scott's point, it's an asset, but basically they're like, you need a balance between the seasons of fun investment and the F&B investment and the major capital investment, because they all kind of have to balance each other out. And
Right.
I'm like, yes, exactly.
Asset. Well, everything that's an asset is also a liability.
Yep.
So
yeah. So speaking of maybe liabilities, I don't know, staffing. That's
that's a really weird transition, Philip. But
I don't
let's move on
know.
to staffing, shall we?
Yeah, so staffing is the next trend. And remember last year we were talking about how tight staffing is, and there was all sorts of drama last year. The J1 visas came under scrutiny last year. There are 16 states that loosened their teen work rules. 33% of operators called staffing critical in IAPA's research from last year, in their 2024 research. And then last holiday season, events nationwide suffered from staffing, especially during Halloween. If I remember back to like the Six Flags, where they like couldn't open their haunted houses in a bunch of locations and up to weeks after the start date for staff. I mean, it was nuts. Like all that was like bananas and all that. And then, then of course RWS coming in and taking over all of the Merlin attractions to provide entertainment for them. I don't know. Again, I'm still not sure why they think they can do it better than anyway, but all that is aside. But then we talked about the whole housing element and how people were trying to work housing into it. Universal Orlando announcing 1,000 units they were building at Disney, almost 1,500 units for workhouse complexes. Holiday World opening the Compass Commons dorms for seasonal hires. I mean, there was a big thing. And then most recently, we've heard a lot of chatter about AI solutions that basically can analyze and in real time move around your staffing so they can just deploy people, the cashier thing, right? Where, this F&B area is not in high demand, so you can immediately deploy. And that's becoming, much more of an industry-wide thing, but also much more accurate. That's helping staffing. But so now what we're seeing is a staffing cool down, right? Again, as the economy, I'm not saying it's a recession. I'm just saying the economy cooling and whatnot, and unemployment is ticking up. Then you're having those staffing pressures ease for parks, which is going to, in theory, help seasonal staffing for this upcoming fall and Christmas break. And then you add AI to that, and hopefully it'll make staffing a lot easier, which again, what we talked about earlier, feeds into them being able to provide more seasonal entertainment to drive repeat visitation.
Well, and I think that, I still think, and people are going to argue with me, I still think this is normalization. I still think this is post-pandemic normalization. What's happened is people during the pandemic realized, you know what, I don't want to work. I really just don't want to work. I don't want to work, and I can survive without working as hard or without working as much. And that trend has shifted now. So
because everything's expensive.
And all of a sudden you can't just get by on what you make off of selling your hand crocheted bracelets on eBay or Etsy. You have to actually now have a bit more income. And I think that that's why the staffing situation is coming back. And like I said, in my view, it's normalization. And everybody's going to say, Scott, you got to stop blaming the pandemic for everything. I said, and the truth is I'm not. I'm saying that we are finally coming back to it. I mean, the pandemic was in essence 2 years. I know people will argue that back and forth as well, but it basically impacted us for 2 years. And it takes time to come back from something like that. You don't recover like a speedboat, you recover like an aircraft carrier. So you turn slowly. And I think this is just finally coming back from that. That's my opinion. I don't know whether it's right or not, but that's my perspective and my opinion on that situation.
Yeah, just to add one note on that too, even looking back at airline stuff, right? Like that still hasn't figured itself out. I mean, like like looking at the number of pilots, and then now we're having a shortage of air traffic controllers, and there's still shortages. And now the planes they're going back.
But that's not because of people don't want to work. That's a different story.
Well, it goes back to the idea of it takes time to train, and so you can't shift it. Even 1 or 2 years is too short of a time, and so they laid off so many people. We're still struggling from shortages, but now they're reducing flight schedules again, like we talked about, the shift in travel patterns that we talked about previous shows. So they're reducing flight schedules. I mean, it's like the tourism sector is pretty impacted much more overtly, I think, by some of the the pandemic trends again, because people have to gather, they have to get to the thing to enjoy the experience, so it's directly impacted. But we're going to continue this discussion on trends in our Patreon episode.
You had to put that little plug in there. But for the rest of you, this is the end of this week. Once again, I just want to remind you, we did record this early, so if there's any giant huge news, we will get to it. Don't panic. But it's just that Philip's going to be at Midwest Haunters Convention, and so he's got to be there, and I'm going to be sitting around the pool drinking mojitos. I don't know. But anyway, thank you so much for listening. We really do appreciate it. On behalf of Philip Hernandez and myself, Scott Swenson, this is Green Tag Theme Park in 30. And guess what? We'll see you next week.